Is Starbucks' latest quarter a sign of a brewing comeback, or just a temporary caffeine jolt? Jim Cramer breaks down Starbucks' Q3 earnings, analyzing whether the coffee giant's recent results signal a true turnaround. Cramer looks at what's working, what's not, and what it all means for investors and coffee lovers alike.
Stock's been doing much better. Brian orchestrated an incredible turnaround at Chipotle, and I think he can do the same at Starbucks. That's why the stock jumped almost 25% on the day he was hired. The stock kept climbing until this March, when everybody started worrying about tariffs and the fact that the turn might be more difficult than first thought, which is why the stock plunged to the high 70s in April, before ultimately rebounding to the low 90s as of today. Throughout this period, we've stuck with Starbucks because I believe Brian can deliver another turnaround here. He's got a plan to solve the throughput problem. This is a chain with too many customers, so they need to be able to process your orders more quickly with a goal of less than 4 minutes. He's also trying to improve the in-store experience, getting back to the Starbucks of old, the old third place between home and office. Along the way, though, the numbers, let's say they've been pretty choppy. When the company reported in late April, they posted a top and bottom line miss, with some of their worst numbers coming from the United States business, sparking fears that the turnaround could be further out than we thought. Now, look, I remain a believer. I told Investing Club members to be a big buyer, but things did feel pretty grim. Fast forward to last night, when Starbucks reported again. This time, the headline numbers were a bit disappointing, with global same-store sales down 2%. Wall Street was looking for a 1.3% decline. Even though their revenue came in higher than expected, their earnings seemed to come in soft, with Starbucks earning 50 cents per share. Wall Street was looking for 65 cents. However, much of that miss was actually from one-off items like a tax charge and an expensive leadership meeting. Well, expensive, but I think it paid off. Without those, the company would have earned 61 cents per share. Still a miss, but a much smaller one. When those numbers first crossed the wire right after the close, the stock plunged as people figured, oh, here we go, another weak quarter. But then it quickly bounced back as investors spent more time looking at the quarter. First off, people saw through the confusing earnings numbers, realizing that the miss wasn't as bad as they thought. Second, while Starbucks had weak global same-store sales, there were also some very encouraging signs in certain regions. North America, which had been a real problem area, came in better than expected, with the U.S. specifically in line with expectations, not missing the estimates as it did the previous quarter. China, previously the worst region for Starbucks, was also a relative bright spot, with same-store sales up 2%, driven by a 6% increase in transactions. The disappointment here came from the rest of the international business, which had flat comps. Geez, Wall Street was looking for 2.2% uptick. It had been a really good area. Again, not great, but management's been focused on turning around the domestic business first, and they seem to be making progress on that front. Even better, when the conference call got going last night, Nickel and his team gave us many more reasons to feel optimistic. Hey, he devoted a significant portion of his prepared remarks to the company's Green Apron Service operating model, which is basically their plan to improve the in-store experience here in America. Starbucks began testing this model in 1,500 stores 8 weeks ago. That's all, 8 weeks. But Nickel said that the partner feedback has been tremendous, with these 1,500 stores seeing improvements in transactions, sales, and customer service times. Given the success they've had so far, Nickel said that Starbucks plans to begin scaling up the Green Apron service across all of U.S. stores starting in mid-August. That is well ahead of their original schedule and very bullish, and why I think at the very beginning of the call he said they're ahead of schedule. Now, this morning when I spoke to Brian on Squawk on the Street, he gave us a more complete rundown on Green Apron. Listen to this.
We wanted to get back to winning the morning day part, and then we wanted to make sure we were staffed correctly throughout the balance of the day. So what you'll see with the Green Apron service model is we're reducing the number of hours where we have minimum staffing, and then we're making sure that we have the right number of partners in the right position at the right times. I think what you'll see is nice improvements in the morning day part, and then the balance of the day, what we've seen is we've also seen transaction gains there.
And that's what I found most encouraging about the Starbucks quarter. Management's plan for improving the core business here at home, they're already showing some really promising results, so much so that the company's accelerating that rollout of their new model. At the end of the day, nothing else matters for Starbucks if it can't turn the U.S. business around. Now they've gotten a proven way to make that happen. There was plenty of other positive news, too, like the solid performance in China, where Nickel said customers were responding to beverage innovation and new customization options, while Starbucks has been really ruthless about keeping prices low for non-coffee items. He also gave a strategic update on whether they might sell that Chinese business, saying that Starbucks has, quote, received significant interest from more than 20 interested parties and we're evaluating options, end quote. Though he stressed that the company remains committed to keeping some of the China business, he wants to retain a meaningful stake in it. They do want to go down to the third and fourth tier cities. That's very important. Nickel also offered a walk around the globe, touching on some other key international markets, and the commentary was much more promising than the disappointing overall international same-store sales number. Again, I felt better. Putting it all together, I think it was a very positive quarter. Even if the stock was all over the map today, I didn't want to take my cue from the stock and see more. It seemed to have more to do with the Federal Reserve. Well, that's a little ridiculous. But don't worry about these short-term swings, which were kind of a microcosm of the stock's whole first year under Nickel's leadership. Focus on what matters, the long-term turnaround plan, which is going well ahead of schedule. The bottom line, if Brian Nickel keeps delivering on the turnaround front, I bet Starbucks and its shareholders will be huge winners. That's still my expectation here, and I feel even better about it tonight than I did last night.